Hello guys, good day. Welcome to another video lecture in ACC 311 Income Taxation. So in the past previous video lectures guys, we have discussed income derived by an individual, corporation, and any other types of taxpayers. This time, in this particular video lecture, we will be discussing the items which are allowed by the tax code to be deducted to our gross income in computing for our taxable income. Okay? But in this specific lecture, we will only be focusing on the discussion on the first part of the allowable deductions that includes general principles of deductions, interest expense, taxes, and losses. So the rest of the itemized deductions will be discussed in the succeeding video lecture. Okay, so let's start. When we talk about deductions, guys, it includes the deductions from gross income pertaining to business expenses incurred by a taxpayer engaged in business or engaged in practice or practice of profession. So that means deductions are those legitimate expenses that is incurred directly throughout the conduct of business or practice of profession. Now, we have here several types of expenses compared to each other. The first set is business expenses versus personal expenses. The second one is our business expenses versus our business capital expenditure. So let us discuss and differentiate these types of expenses and try to compare it with our business expenses. That is, again, as we have considered as your allowable deductions. Okay, let's have business expenses versus personal expenses. So when we talk about business expenses, these are costs of doing trade, business, or practice of profession, such as employee salaries, office utilities, supplies and rent, taxes, losses, bad debts, depreciation on business properties, research and development, and the likes. So, in other words, business expenses are again those related to business expenses. Okay? All other direct and indirect expenses that is incurred by the taxpayer in conducting business or in practicing his or her profession. While on the other hand, when we talk about personal expenses, it includes the living and family expenses of individual taxpayers, such as family food, personal recreation and transportation, medication, home rentals, and utilities, tuition fees of dependents, and other similar expenses. Now, it is important to note, guys, that when we incur personal expenses, we should and never include personal expenses as part of our allowable expenses that will be deducted to our gross income in computing for our taxable income. Again, let me repeat, personal expenses are not included as part of your allowable itemized expenses to compute for your taxable income. So that business expenses and personal expenses should be apart. Only those legitimate business expenses are allowed to be deducted in computing for your taxable income. Okay? Let's proceed with the comparison of our expenses and capital expenditure. So when we talk about business expenses, it only benefit the current accounting period. They are cost of the generating or gains for the current period. Hence, they are deductible against gross income in the current period. So when we talk about business expenses, these are expenses which incurred and paid on a particular accounting period or taxable period that benefits that specific period. Okay? Examples are the business expenses mentioned in the previous slide. While on the other hand, capital expenditure are expenses that benefit future accounting periods. They are initially recorded as assets upon acquisition, then later deducted against future gross income when used in trade, business, or profession of the taxpayer. Now, the advanced deduction of capital expenditure is not warranted as it contradicts the lifeblood doctrine. So, very good example of our capital expenditure, guys, are those expenditures that is used in buying equipment. Obviously, these equipment, if used into business, it will be considered as an ordinary asset. Although it is an ordinary asset, guys, but this is actually the expenses related to that ordinary asset will be spreaded out throughout the year or the expected useful life of that asset through depreciation. So therefore, when we incur capital expenditure, only the portion, only the portion of the expenses that is benefiting a particular accounting period or taxable period will be included as allowable expenses. Okay? Example, when you have an equipment and such equipment is depreciated using 5 expected useful life, so therefore you need to compute first the depreciation per year for 5 years para to compute in the amount that can be included as deductible expenses for that particular year. Okay? Again, you are not allowed as if it is not warranted as since it is not warranted in the life blood doctrine to deduct the entire amount, entire amount of the cost of that equipment, as per life blood doctrine. Now, the train law, okay, your RA 10963 per Revenue Regulation 8 2018 or through the implementation of Train has presented the updated list of our itemized deductions. So we have here several allowable deductions that we could deduct to our gross income in eventually determining our taxable income. So first in line are our ordinary and necessary trade, business, or professional expenses. Okay? That includes, example, those cost of goods sold, cost of sales, and any other expenses that is related to trade and business, like marketing expenses, selling expenses, general and administrative expenses, and so on and so forth. Aside from those direct expenses of the business or of a professional practice, interest, taxes, losses, bad debts, depreciation, depletion of oil and gas wells and mines, charitable and other contributions, research and development, pension trusts, additional requirements for deductibility of certain payments, and specifically your optional standard deductions are the items that can be deducted to your gross income. Okay? Pero guys, it is important to note that when the taxpayer opted to use itemized deduction, then obviously, optional standard deduction could no longer be used. Pero on the other hand, when the taxpayer opted to use itemized optional standard deduction, the itemized deduction cannot also be considered to be deducted, okay, as what we have discussed in your individual and corporate taxation for optional standard deduction. Okay? Now, I'd like you to highlight this, guys. This is very important, and I'd like you to put an emphasis on this. The above deductible items shall be allowed as deduction only if it is shown that the tax required to be deducted and withheld therefrom has been paid to the BIR. Okay? So that means if there are or if the taxpayer fails to withhold something from that particular expenses, then therefore the BIR will disallow the deduction of that particular expenses. For example, salaries expense to your employees, okay? Salaries expense of the employee of a particular corporation. When the corporation actually failed to withheld compensation withholding tax from the salaries of the employees, then therefore the taxpayer, the corporate taxpayer, will not be allowed to deduct or to claim allowable deductions for the salaries expense it pays to its employees due to, again, failure of withholding particular withholding tax to its employees. So again, this is very important kasi nga, as what it suggests, when there is no withholding tax, no deduction will be allowed. Okay? Now, we also have here special deductions, guys. Aside from our itemized deductions and optional standard deduction, we have here insurance for insurance companies, net additions required by law to be made within the year to reserve funds, and the sums other than dividends paid within the year on policy and annuity contracts. For mutual insurance companies, any portion of the premium deposits returned to their policyholders. For mutual marine insurance companies, we have amounts paid for reinsurance, amounts repaid to policyholders on account of premiums previously paid by them, and interest paid upon those amount between the ascertainment and payment thereof. And lastly, assessment insurance companies for actual deposit of sums with the officers of the government of the Philippines pursuant to law as addition to generate or reserve funds. However, guys, this video lecture will give focus on the requisites for deductibility of itemized expenses. Okay? So we will focus our discussion from now on the requisites for an itemized expenses to be deducted. Okay? So we have here number 1, expenses in general, requisites for deductibility of expenses. Okay? It should be, as what we have mentioned earlier, it should be ordinary and necessary. It should be related to business. So if it is personal, then obviously it is not part of the allowed expenses to be deducted to our gross income. It should be paid or incurred during the taxable year. Paid or incurred. So that means if even if it's still payable as long as it is already incurred, then such expenses can be allowed to be deducted for a particular year. Another, directly attributable to the development, management, operation, and or conduct of the trade, business, or exercise of profession. And the 3D, guys, substantiated with sufficient evidence such as official receipts or other adequate records. So again, as what we have discussed in your individual and corporate taxation, when they actually opt to use itemized expenses, then there is the burden of proof on the shoulders of the taxpayer to prove that their claimed expenses are actually legit. Okay? So to prove that such expenses are legitimate, then therefore they should provide official receipts and any other adequate records that will again prove that those expenses are in the conduct of trade or practice of profession. Number 2, requisites for deductibility of salaries, wages, and other forms of compensation, including the grossed up monetary value of fringe benefits. Letter A, it should be reasonable. Number 2, personal services actually rendered. So the service is actually have been rendered or have been rendered already by the employee. And then letter C, withholding tax imposed has been paid. Yun nga yung sinabi kanina, guys, on our introduction, that when the expenses or when the withholding tax of such expenses were not paid or were not collected by a particular taxpayer, then therefore any expenses will not be included or will not be allowed to be deducted as an expenses. Okay? Another, we have for travel expenses here and abroad. In order for it to be included as deductible, guys, number 1, it should be reasonable. Number 2, incurred or paid while away from home. Obviously, you cannot, no, use, you cannot claim as deductible all those expenses. Okay, expenses while you are at home. And then letter C, incurred or paid in the pursuit of trade, business, or profession. Okay. And then we have here the last one, requisites for deductibility of rentals. So it should also be reasonable. So again, all expenses before it can be claimed as deduction, guys, it must be reasonable. No? Letter B, for purposes of trade, business, or profession, it should be clear, guys, that your rentals, in order for it to be deductible, it should be for the purpose of trade, business, or profession. Any rental payment for your personal home, okay, if it is not a fringe benefit, then therefore, it should not be claimed as a deductible rent expense. Okay? Letter C, taxpayer has not taken or is not taking title or in which he has no equity other than that of a lessee, user, or a possessor. Okay? Another, guys, we have deductibility of entertainment, amusement, and recreation expenses. So this is usually, we call it as EAR or EAR, entertainment, amusement, and recreation expenses. Entertainment, amusement, and recreation expenses includes representation expenses and or depreciation or rental expense relating to entertainment facilities as described, such as representation expenses and entertainment facilities. So what do we mean by representation expenses? These shall refer to expenses incurred by a taxpayer in connection with the conduct of his trade, business, or exercise of profession in entertaining, providing amusement and recreation to, or meeting with a guest or guests at a dining place, place of amusement and country club, theater, concert, play, sporting event, and similar events of places. While entertainment facilities will refer to a yacht, vacation home, or condominium, and any similar item of real or personal property used by the taxpayer primarily for the entertainment, amusement, or recreation of guests or employees. So when there are actually expenses of a particular taxpayer relating to these, guys, then this is also considered as deductible. Pero later on, we will discuss the requisites or the threshold on the actual amount that can be deducted. So, but this time, it must, before an entertainment, amusement, and recreation expenses to be deductible, it must be paid or incurred during the taxable year. So that's common. Must be directly connected to the development, management, and operation or conduct of trade, business, or profession, or directly related to or in furtherance of the conduct of his or its trade, business, or exercise and profession. And so on. Okay? This time, let us proceed doon sa ceiling on deductible entertainment, amusement, and recreation expenses. So, as what I have mentioned earlier, here is not actually taxable or deductible in full or in its entirety, because we have only a limit to up to certain point lang na mahimong deductible ang is entertainment, amusement, and recreation expenses. So we have two: when the taxpayer is selling goods or services, or selling goods or properties. When they are selling goods or properties, the maximum, guys, is 0.5% of net sales or gross sales, less returns, allowances, and sales discount. In short, 0.50% of net sales. Pero when the taxpayer is actually selling services, including exercise of profession and use of lease of property, your threshold or maximum limit will be 1% of your net revenue. Okay? Net revenue would simply mean gross revenue less discount. Okay? So in short, when your actual entertainment, amusement, and recreation expenses exceeds with this threshold, then therefore, the ones that will be allowed as a deduction is the lower between the actual expenses or actual year expenses and our threshold. Okay? So I think we have an example for that. Okay, let's time ERA. Corporation is engaged in the sale of goods and services with net sales and net revenue of 200,000 and 100,000 respectively. So the actual entertainment, amusement, and recreation expense for the taxable quarter totaled to 3,000 pesos. Okay? So, how much is the amount of the deductible entertainment, amusement, and recreation expenses? So, again, guys, we don't have any complications at all if the taxpayer is selling single type of product. For example, goods, then goods lang ang iyang gibaligya, sales, then sales lang ang iyang gibaligya, because you just simply compare the actual and the maximum, which is 5%, 0.05% or 1%. Pero in this case, guys, there is actually hybrid ng products or services provided by the entity. It is selling goods, and at the same time, it is selling its services. So how are we going to compute for the actual or allowed year expenses? Okay? Allowable, deductible na year expenses. So in this case, so we have here, we will base obviously from our net sales and our net revenue. So we have net sales of 200,000 and sale of service of 100,000. We have a total of 300,000. So in this case, guys, we will be um, computing for the proportion of each type of service or good. Okay? So how much was our actual year? Our actual year was 3,000. So you multiply it by 2 over 3 and 1 over 3 for sale of goods and sale of services respectively. So that means out of 3,000, guys, 2,000 daw is for sale of goods and 1,000 will be for the sale of service. Okay? You simply apportion or distribute the actual amusement and recreation expenses. On the other hand, on the third item, we need to compute for the maximum percentage ceiling of year. Okay? We will use the maximum ceiling. So sale of goods, again, it is subjected to 0.50%. Okay? 0.50% or one half of 1%. So that is 200,000 times 0.5%, or one half of 1%. So that is 1,000. And then for the sale of service, 1% of um, net receipts. So we have 100,000 times 1%. So this is also 1,000. So that means, guys, your maximum percentage lang is 2,000. So para ma-compute nato ang total allowed, we just simply compare. Okay? I-compare nato si a portion na year and your maximum. So sale of goods, so since ang lower sa ilang duha is yung ceiling, so therefore 1,000 will be used for sale of goods. And in this case, guys, since equal man sila, automatic 1,000 also ang allowed nato na year expenses attributed to sale of service. So in short, in total meron tayong 2,000 na allowable entertainment, amusement, and recreation expenses. Okay? So this is for year. Okay? So another type of itemized expenses is your interest expense. Okay? So interest expenses. So this is actually quite guys, this is interesting because um it's not actually the actual interest expense ang allowed to be deducted. Okay, later on we will identify the reason why. But this time, let us proceed first with the requisites of deductibility of an interest expense. Again, letter A, there must be an indebtedness. There must be an utang in order for an interest expense to be deductible. Letter B, paid or incurred upon such indebtedness. And then the indebtedness must be that of the taxpayer. Dapat ang nangutang is ang taxpayer. Connected with the taxpayer's trade or business or exercise of profession. Must have been paid or incurred during the taxable year. So, dapat nabayaran karon nga tuig or na-incur karon nga tuig. Must have been stipulated in writing. Okay, this is also interesting because if an interest is not stipulated in writing and then you still have paid an interest, then therefore such interest paid na without stipulation, ang pagbayad sa interest or ang pag-incur sa interest, then that will be disallowed. Okay? That must be disallowed. So, dapat, any interest expense should be into writing and must be legally due. Dapat nag-due na siya. Must not be between the related or must not be between related taxpayers. So, dapat it's not an utang from a related party, okay? And it must not be incurred to finance petroleum operation. And lastly, in case of interest incurred to acquire property used in trade, business, or exercise of profession, the same was not treated as capital expenditure. Okay? So, as we all know, guys, that if an interest expense is treated as a capital expenditure, then therefore it will be forming part of the total cost of the property. Okay, 'di ba? The concept of borrowing cost sa tuwang intermediate accounting or financial accounting. So, when you borrow money for building a property that's related to business or to acquiring equipment or machinery that is to be used in the practice of profession or conduct of trade, as long as the interest of that, guys, is not capitalized, okay, is not included as part of, or will not be included as part of the cost of that asset, then therefore it can be allowed as an interest, deductible interest expense. Okay? Now, this time, let's proceed naman sa reduction of the deductible interest expense. Yun na nga yung sinabi ko kanina na if you have an interest expense, there are times that your interest expense will not be deductible in full, especially when you have an interest income which are subject to final tax. Okay? Do you remember? Can you still remember? Sa components of our gross income, we have two types of interest income. Those interest income that is from indebtedness and interest income from banks, which are subject to final tax of 20%. Now, if you have interest income that is subject to final tax, okay? Walay labot tong interest income from indebtedness, but yung mga interest income from that is subject to final tax, okay? That will somehow reduce your allowable deductible interest expense. Okay? Whatever interest expense you have will be reduced by starting January 1, 2009, 33% of your interest income which is subject to final tax. Okay? So, you should be careful. Dili tanan interest expenses ang pwede i-deduct. Pero, walay problema kung wala kay interest income nga subject to final tax because the entire interest expense will be deducted in full. Dira lang ka mag-assess kapag naa kay interest income subject to final tax because how much is the 33% of that? Okay, the 33% of that interest income, so dapat gross pa na siya of gross pa na siya of final tax, multiply it by 33%, and that 33% will be deducted didto sa imong actual interest expense incurred or paid for a particular year para ma-compute nimo ang allowed or deductible na interest expense. Okay, I think later on, guys, we have a sample problem for that. Another, interest incurred or paid by the taxpayer on all unpaid business-related taxes shall be fully deductible interest from the gross income and shall not be subject to reduction by an amount equal to certain percentage of interest income subject to final tax. Okay, so it means that if you have interest on delinquency, guys, okay, when there are delinquent payment of income tax, obviously, not just simply income tax, but all types of taxes, as long as it is related to trade or business, that will incur an interest. So later on the later or on the last na mga topics of our subject, we will discuss how to compute interest on delinquent payment of taxes. But this time, guys, let us go back muna on interest paid by the taxpayer on all unpaid business related taxes. So since, guys, it is not it is not due from an indebtedness, therefore as the text has suggested, it will not be reduced by any amount, or it will not be reduced equal to the 33% of your interest income subject to final tax. Okay? Ang i-reduce lang og 33% based on your income tax, interest income subject to final tax, guys, is kadto lang mga interest expense nga gikan sa utang. Okay? Gikan sa utang. And then, another specific important point, deductible interest expense will be deductible not in the year the interest was paid in advance, okay? But in the year that the indebtedness was paid, okay? So there are times that there are interest expenses which are the expenses or the interest itself are paid in advance, okay? Tanggalon na daan dito sa giutang ang gi tanggalon na dito daan sa giutang ang interest. Okay? Pero the rule the tax code has said it will not be deducted on the year it was actually paid. Okay? On the year the interest expense was paid, but it is deductible on the year the principal has paid or the actual utang has paid. Okay? So therefore, for example, nangutang ka karon og ano guys, 100,000, the interest is, let's say, ang interest kay 10,000, okay, kuha na siya daan sa imong giutang. So that means ang imuhang na proceeds na lang from that utang transaction is 90,000 na lang, okay? So that means ang 10,000 dili nimo siya i-deduct on that particular year. Okay? Let's say for example, next year you paid in full the 100,000 nimo nga principal. So since on that year pa lang nimo nabayaran ang actual utang or indebtedness, then therefore on that specific year pa lang pud nimo pwede ma-deduct ang interest expense nga 10,000. Okay? Considering na wala kay interest income nga subject to final tax. Example. Okay. On 2018, an individual taxpayer using cash basis of accounting obtained 500 loans, okay, 500,000 loan from a bank for business use. The bank deducted an advance and interest of 50,000 in 2019. The 500,000 was paid in full by the taxpayer. So yun nga yung na-mention earlier guys on the rules when there is an advance payment of interest. So in that case, deductible interest in 2018. Uh-huh. Okay, sorry, baliktad na siya. The deductible interest in 2018 should be zero, guys, because the actual liability was paid lang on 2019. So therefore, ang tibuok 50,000 will be deductible on the 2019, dili pagka 2018. Okay, I stand corrected on this. Deductible interest on 2018 should be zero, and deductible interest for 2019 should be 50,000 on the year where the actual liability or actual indebtedness has been paid. Okay? Another illustration pertaining still to interest expense. Let us say you have there a taxpayer having the following interest expense in interest income in 2019. Okay? Interest income on bank loan, guys, is 100,000. So, that is interest expense. That's our gross interest expense. We also have interest income from time deposits. So as we all know guys, interest income from time deposits is subject to final tax. So therefore, that will be used later on in computing for our arbitrage limit na 33%. And then, interest income from promissory notes na 40,000. So, since ang interest income from promissory note guys is not subject to final tax, then therefore dili na siya appeal sa ato ang basis pag-compute sa ato ang 33% nga arbitrage limit. So therefore, to compute for our deductible interest expense, then you have there your gross interest expense of 100,000 less your arbitrage limit na 10,000 times 33%. So you have 3,300. You deduct it sa inyong interest expense para ma-compute na to ang ato ang deductible interest expense. So in this case, our deductible interest expense is 96,700. Okay? Deductible interest expense is 96,700. Okay? Now, let's proceed with taxes. Okay? Taxes. Okay, these taxes guys are the subject matter of our ato ang ano, no? Subject matter sa ato ang klase, sa ato ang course, okay, sa ato ang subject tax. As we have discussed, we have a lot of taxes. We have numerous, no? We have a number of taxes. But this time, before tax payment can be allowed to be deducted, it should be paid muna or incurred within the taxable year, or it is connected with the taxpayer's profession, trade, or business. Okay? The meaning or the term tax includes national and local taxes and means tax proper only. So, katong tax lang yun, guys. Okay? So, that means kung naa kay interest and naay delinquency, so therefore, magbayad ka og penalty. So, penalty is not actually part of the tax. So, if the problem would ask you guys to compute for the deductible tax, then therefore, you will not include the interest on the delinquent payment of tax. You will not include any surcharge or penalty. Okay? Kadtong tax lang yun proper. No? Kung pila lang yun ang tax payable or kung pila lang yun ang tax due. Okay? No deduction shall be claimed for any surcharge or penalty on delinquent taxes. So, if ever kasi guys, when a taxpayer failed to pay it on time or has delayed the payment of that tax payment, no, that taxpayer will suffer surcharge or penalty. So, as we all know, surcharge and penalty is not a tax. So, therefore, it will not be included as deductible taxes. Okay? And another thing, guys, surcharge and penalty is not actually it is discretionary. Okay, discretionary siya, it can be avoided. So meaning katangahan ni taxpayer nga nung nagka-surcharge or penalty siya. So therefore, ang iyang payment sa iyang katangahan will not be suffered by the government or will not be used for his or her advantage. So that is why surcharge and penalty will not be allowed to be deducted sa iyang gross income. And then, pero, ang interest on delinquent taxes is allowed to be deducted. Not as taxes, pero interest expense. Guys, iba ang interest, iba ang penalty. Okay? Iba ang surcharge or penalty. Because interest, guys, as what we have mentioned, what I have mentioned nga natay separate topic on the computation of interest and computation of delinquency and surcharges. Ang surcharge, guys, for your information, regardless kung one day lang ka nga of na late of payment, you will be paying the entire or the actual amount of surcharge. Okay? For example, ang surcharge is 50,000. No? Regardless kung late ka og 1 year or late ka og 1 day, you will really be paying surcharge of 50,000. Pero ang interest, guys, interest will run every day. So for example, kung late lang kag 1 day, then therefore, the interest per annum will be prorated for 1 day lang. Okay? Kung na-late kag 1 year, then therefore, you will really be paying the entire interest per annum. Unlike a surcharge. Okay? But don't worry again, we will have separate, complete discussions on that. Since we have a lot of taxes, guys, no? We have a lot of taxes paid by a particular taxpayer. Take note that not all are deductible taxes. We have already discussed these types of non-deductible taxes when we discussed um, recoveries or refunds of taxes dito as a gross income, no? We have talked it na. Pero again, just a sort of, recap also. Mao ni sila ang mga taxes nga dili pwede i-deduct. Philippine income tax, no? Income tax kani ato ang subject, katong income tax ni employee or income tax ni individual o katong income tax na 30% or passive income final tax or CGT na final tax, dili siya pwede i-deduct as an interest expense. Estate and donors tax also, transfers taxes will not also be deducted. Special assessment, usually this is on land. Foreign income tax claimed as tax credit. Okay, we will also have separate discussion on tax credits. Stock transaction tax, okay, yung 60% of 1% when you sell trading securities in a local stock exchange, no, that is subject to stock transaction tax, that is not subject to deductions, it is not part of the deductible taxes. And lastly, VAT. So this list, guys, A to F is exclusive, meaning all other types of taxes are deductible except these six. Okay? And then lastly, guys, in terms of taxes, credit against tax for taxes for foreign countries. So if ever you have paid taxes in foreign countries, you could actually deduct that as tax. Okay? Pero meron tayong allowable income tax credit which is lower between actual foreign income tax paid and statutory limitation. But we will not deal so much of that tax credit in this case, guys, because we will also have separate discussion for that. Okay? We will have separate discussion for tax credits for taxpayers. Okay? This time, let's proceed with losses. Okay? I think this is the last na deduction that we will be discussing for this specific part of our video lecture. Okay? Requisites for deductibility of losses. We have a lot of losses, guys, um, that can be deducted. Pero make sure that it is, you know, in accordance with the law na mga losses or in accordance with the tax code. Now, let us discuss kanus-a pwede mahimong deductible ang atoang mga loss. Number one, or letter A, actual sustained during the taxable year, or the losses actually sustained during the taxable year. For example, you have, you know, higher cost or expenses over your selling price. So that is a loss which is deductible. Not compensated for by insurance or other forms of indemnity. Okay? Yung mga losses which is not compensated by insurance, incurred in trade, profession, or business, property is connected with trade, business, or profession, arising from fortuitous events, acts of God like fire, storm, shipwreck, or other casualties, or from robbery, theft, or embezzlement. Lahat ng mga nalugi due to robbery, theft, and embezzlement are deductible. And then, pero, meron siyang consideration. Dapat the declaration of loss is submitted within 45 days from the date of the discovery of the casualty or robbery, theft, or embezzlement giving rise to the loss. Okay? 45 days. And then, not claimed as a deduction for estate tax purposes in the estate tax return. Okay? Kaya naman punta later on. Basta, we will not talk it here na lang. Kay any losses, guys, kay in terms of estate, no, allow naman pud na pwede mo pud i-claim sa deductible estate ang losses. So dapat wala siya gi-claim didto as sa estate tax return as deduction also para mahimo siyang deductible diri sa income tax. Okay? Another type of loss is yung NOLCO, no? We have discussed it na dito. We have not discussed it thoroughly, but we have talked it sometime there sa computation of our taxable income kay corporation. Okay, net operating loss or NOLCO. What do we mean by net operating loss? So net operating loss, it means there is an excess of allowable deduction over the gross income of the business in a taxable year. That means the allowable expenses is higher than the gross income. Example. Yeah, no need to put an example because that is clear. Letter B, net operating loss carry over. Yes, you are correct. It can be carry over pertaining to net operating loss of the business or enterprise for any taxable year immediately preceding the current taxable year. Okay? It can be carried forward. Net operating loss carryover, it pertains to net operating loss of the business or enterprise for any taxable year immediately preceding the current taxable year. Mhm. And then we have here requisites for the deductibility of NOLCO. The operating loss should had not been previously offset as a deduction from gross income. So dapat wala pa siya na claim as NOLCO in the previous years. And there has been no substantial change in the ownership of the business or enterprise. And then, carryover period. The net operating loss shall be carried over as a reduction from gross income for the next 3 succeeding taxable years immediately following the year of such loss. So in this case, guys, it seems that it is the same with the rules on your excess of MCIT over your NIT, 'di ba? When there is excess of MCIT over your NIT, you could actually use that as a tax credit for 3 years, immediate years. Same diri kay NOLCO. When you recognize NOLCO, such NOLCO guys, or such operating loss can be claimed as allowable deduction for the next 3 years. Okay? Pero, dapat, dili pwede nga, gi-claim nimo sa first year, gi-claim po di mo sa second year, gi-claim po di mo sa third year, dili. Dapat, kay ma-violate na niya ang letter C number 1 nga dapat ang operating loss had not been previously offset as deduction from gross income. So, dapat, for example, ang loss guys is loss is kung wala pa siya na-exhaust sa year 1, then sa year 2. Kung wala pa siya sa year 2, sa year 3. Pero kung malampas na ang 3 years, then therefore, mag-prescribe na ang visa sa operating loss. So, dili na ka maka-benefit adtong NOLCO as a deduction to your taxable income. And then, we also have there your net operating loss for mines other than oil and gas wells. So, we'll just read this, guys. For mines other than oil and gas wells, a net operating loss incurred in any of the first 10 years of operation may be carried over as a deduction from the taxable income for the next 5 years immediately following the year of such loss. And the entire amount of the loss shall be carried over to the first 5 taxable years following the loss, and any portion of such loss which exceeds the taxable income of such first year shall be deducted in like manner from the taxable income of the next remaining 4 years. Okay? So aside from those types of losses, napatay other losses na pwede ma-deduct. Like capital loss, okay? Capital loss, it's just fresh, no? It was the subject matter of our discussion on the immediate previous na to, video lecture. As we all know, capital loss, yes, it is deductible, but it has a limit. Capital loss is only deductible only up to the extent of the capital gain. Okay? Any capital gain or any net capital loss, it cannot be deducted to the ordinary income already for that current year. And then, we also have loss on wash sales, guys. Losses from wash sales are not deductible, pero gains from wash sales are taxable. Another is wagering loss. Wagering losses, okay, deductible to the extent of the gains from wagering transactions. Okay? So, itong wagering, guys, this is actually yung act of gambling or illegal activities like embezzlement. Okay? If you have actually losses on that type of activities, it is only deductible. Yes, it is deductible, pero it is only deductible up to the extent of your gains. Okay? Up to your wagering gains. So, kung nanubra ang imuhang expenses or ang imuhang losses from those activities, okay, like gambling and other passive activities, will only be, again, deductible up to the extent of your gains from wagering transactions. And then, we also have their abandonment losses. If contract area where petroleum operations are undertaken is partially or wholly abandoned, all accumulated exploration and development expenditures pertaining to contract area shall be allowed as deduction. Um, this is related dito sa ato ang depletion, guys. Okay? Depletion or matters regarding wasting assets. As we all know, we incur so much of cost on the beginning of the extraction. Pero when that um, activity, okay, is what is that? Abandoned, then all other cost incurred prior or initial na expenses nimo will be considered as a deduction. And then, if producing well is subsequently abandoned, the unamortized cost as well as the undepreciated cost of equipment directly used shall also be allowed as deduction in the year or equipment facility is abandoned. Okay? Katong mga nabilin pa nga undepreciated na mga cost sa sa ato ang mga assets, no? Tong mga sa tawag ana ng mga machines, mga heavy machines nato in that types of activities. We also have loss due to voluntary removal or voluntary removal of building, incident to renewal. Ito din guys are deductible or allowed to be deducted. Okay? So those are the items related to losses. Okay? So this time, let us proceed to illustrative problems relating to our losses. Okay? We have here a domestic corporation having the following data in gross income and expenses. So we have here 16, 17, 18, and 19. So we are tasked to compute for the taxable net income in 2019. So obviously, in regular manner, to compute for the taxable income, we just simply compare your gross income and your business expenses to compute for your taxable income. But again, you should be very careful on the previous years. If ever there are NOLCO or net operating loss in the previous years, those net operating loss in the 3 immediate years should be taken in account kasi nga it can be allowed as deduction for that particular year. So para safe ta, i-account nato ang 16, 17, and 18 kay mo man ni siya ang immediate na mga years nga posible makaapekto kay 2019. Okay? So 2016. So let us try to assess whether there is net operating loss pagka 2016. So in this case, higher ang gross income, so therefore we don't have operating loss for 2016. Same I think for 2017 because we have a taxable income of 50,000 kay 2017. Mas dako ang ato ang gross income kaysa kay expenses pagka 2017. Pero pagka 2018, your expenses is 880 but the gross income is only 70. That gives us an operating loss of I think that is 180,000. Okay? 180,000. So that 180,000 guys can be deducted on the next 3 years. Okay? Or on 2019 for um, the first year. So therefore, from the net income of 2019 nga 900 minus 600, so there is 300,000 na net income dapat. Pero again, maka-benefit siya dito sa NOLCO na 180,000 from 2018. Thus, giving a taxable income of 120. Okay? So, na ay taxable income na 120,000. So, that means, mas gamay ang iyahang tax liability in this case. Compared kung ang net income is 300,000 lang. Okay? Pero guys, kung if ever the taxpayer failed to determine and to account NOLCO pagka 2018 or pagka 2019, wa niya nabantayan nga naday siya NOLCO pagka 2018, pwede pagyapon niya ma-claim as NOLCO pagka 20 o pagka 21. Okay? 2020 and 2021. Another guys, we have here a taxpayer engaged in farming incurred the following losses. Okay? The losses are as follows. Number one, loss on destruction of residence by a storm, loss on sale of old farm equipment, loss on loss of shares that became worthless, and then purchase cost of a bull lost during the storm. Take note that the taxpayer is a farmer. And the value of an animal offspring killed by blackleg disease costing 20,000. So the following are the deductible losses. So una, loss on sale of old farm equipment, 50, and the purchase of cost of a bull lost during a storm of 30,000. So total deductible loss lang guys kay 80,000. So the reason why nga nung others are not allowed as deductible expenses because number one, the loss on destruction of residence is a personal loss. Okay? It has no relationship at all sa business, trade, or practice of profession. So therefore, it is not allowed to be deducted as an expenses. Another, The loss on worthless shares, guys, is considered as a capital loss, 'di ba? As we discussed last video, when there is a capital loss, it is only deductible again up to the extent of capital gain. And in that case, guys, wala tayong capital gain, so therefore, it is not considered as taxable or deductible loss. And then, lastly, your value of animal offspring killed by black leg disease. Pero although siya guys, although it is part no of 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 being a farmer, it could be a source of income of a farmer. Pero the what's this? The concept there is that the value of the dead animal offspring is a loss of income, okay, rather than loss of capital. Hence, non-deductible. Okay? It's a loss of income, pero it's a loss, not a loss of capital. Therefore, it is non-deductible. So, ang total deductible lang na loss will be 80,000. And then last illustration, we have there an uninsured building had a book value of 1 million when a fire broke out. It was later restored at a total cost of 1.2 million. So we have two assumptions there when there is a total loss or partial loss. So if it's actually a total loss, assuming that the building was partially it's totally not partially. Assuming that the building was totally destroyed, the 1 million tax basis is a deductible as fire loss, pero ang 1.2 million replacement cost will be considered as a capitalized cost of the new building. Pero kung partial loss lang guys, kung partial loss lang, so assuming that the building was partially destroyed, then the restoration cost of 1 million shall be expensed as fire loss. Pero the excess of 200,000 will be considered as a restoration cost. Will be forming part as the capitalized expense, capitalized cost of the new building. Okay? So that is when there is fire and then it was restored and it is not insured, compensated by any indemnity or compensated by any insurances at all. Okay? So I think that's the end of our video lecture for the part 1 of our discussion for your allowable deductions in your gross income. Okay? So in our succeeding video lecture, we will continue discussing all other items which are allowed to be deducted as part of your deductions. Okay? So the following expenses or deductions guys will be discussed in the next video lecture. See bad debts, depreciation, depletion of oil and gas well and mines, charitable and other contributions, research and development, and pension trusts. So everything about those will be discussed in the next video. Again, thank you for watching our video lecture for this time and see you next time. God bless.